All right, I want to get your quick reaction on that EU-U.S. trade deal and what it means for the markets. Are there any sectors that you see especially benefiting on the back of that deal?
I think we are seeing a lot of benefits in terms of actually the European markets because it gives them certainty. The European markets have actually had some pockets of strength over the last couple of months. It's something they haven't seen for a long period of time. But we think from Europe, it gives a lot of certainty. To the US, that certainty is another reason that we're actually positive, and we continue to be positive on the market despite us trading here at all-time highs.
All right, so I know you gave us your word of the day before all this happened, but your word of the day is mediocre. What's mediocre?
I think that we've been so focused on the Magnificent Seven, and we really haven't dug into the details here. And actually, more than half of the Magnificent Seven have actually underperformed the S&P year to date. So, they're kind of mediocre in terms of performance. They're not so magnificent. And this actually supports a call that we made going into the year, which was for a broadening of the market. So, we're looking at, the S&P equal weighted index as opposed to the market weight index outperforming going forward.
All right, so your pick for us is also mid-caps. We're going to show some ETFs that represent mid-caps, whether it's just the mid-cap index for the 400, the next generation triple Q mid-caps, and also there's a Wisdom Tree dividend-focused mid-cap ETF. Which part of the mid-cap universe should people be playing? Tech-focused, just the broader index, dividend-focused? Where are you seeing the opportunity?
Actually, we're finding the opportunity here in quality. And I'm going to define quality because I think it's a term that people don't think enough about. So we're looking for companies with high returns on invested capital and low net debt to EBITDA and high returns on equity. That low debt to EBITDA gives them the opportunity to continue to invest. We're very bullish on AI and the returns to AI. So we're looking for companies that can make the upfront investment. That is also being accelerated by the tax bill and that the deductibility of R&D expense. So we think there's a lot of good reasons for you wanting to step your toes into the mid-cap space, but keep it on the quality spectrum.
Is the Fed also a factor? Again, we have a Fed meeting coming up later today. Most people don't expect to cut, but there are a lot of people that expect to cut coming up in September. Is the idea that mid-caps are also going to benefit from a potential rate cut? And does the EU-U.S. trade deal, does that, in your mind, increase the odds of seeing that cut come as soon as September?
Actually probably decreases the odds of a September rate cut because the market's actually doing better. The economy's got a lot more support. You're right. As we look at September, the odds of a rate cut have gone from about 90% down to just under 60%. So the market isn't expecting a cut as they were before. We've been in the camp, we've been in it for some time, that we do not expect Fed cuts this year. If we do, that'll be only one, not two, like the market is currently expecting.
All right. We also have the U.S.-China trade talks very quickly because we got to get going. What are your expectations? Do you expect an extension, and how do you expect the market to react either way, extension or deal made?
I think that we're going to just kick that can down the road, so I'm in the extension camp. And from a market perspective, that's just good news because it gives us more time to come to a trade deal that makes sense for everybody. So we're in the bullish camp on the trade side.